Yeah, so we're going to have a look at using the logarithmic chart today, yeah? And why am I doing that? Let me show you the ETH chart and then we just get going. And if you have any questions along the way, is just ask, yeah? So here is the ETH chart. I was doing a little bit of work on it, yeah? What's the difference between a normal chart and a logarithmic? Is down here is where you turn it on. And this is the difference here so this is ETH, and I'm using Bitstamp because Bitstamp gives a lot of history of the charts, yeah? Some of the other exchanges don't give so much history. So here it is all the way back 2016, 15, all the way back to there, yeah? So this is the logarithmic, where when I turn it off or is this, no, that's the log. Oh, hang on, I'm getting mixed up now. Yeah, this is the logarithmic. Okay, where's that? What have I done? Okay. What's going on? I don't know what I've done now. But I'll tell you the difference between them, yeah? Is one, there it is all the way back. The difference is with a normal chart, yeah, that's log on there now, yeah? Look how much price action you can fit in. And this goes all the way back to 2015. So it's like 7 years of charts, yeah, on the daily. Is when I turn the log off, this is what happens to it it's much harder. See, when I zoom in like this, it's harder to keep it all on the screen. But when I put on the log chart, logarithmic, you get a lot more of it on the screen. And also look at how it moves. So what's the difference? Is a normal chart is you get 1, 2, 3, it goes up 1, 2, 3. Where the logarithmic is 1 equals 10, 2 equals 20. So 10, 20, 30. So it goes up in a more exponential way. So it allows you to hold more on the screen. And look at how you can see the action, the price action as it moves here, yeah? Where it's flatter when I turn off log, you see it's all flat like that. So this is what it looks like without log. And you zoom up like this and you have that there, yeah? Okay. Where now you can see the gradient, the growth of it as you go along when the log is on. Okay, so when you map like this, it gives you a different perception. It gives you a different perception of price action, and it also gives you a different perception of your channels. So now one of the things we're going to look for is, as I do out the channels here, is looking for long-term channels that give us that are valid and relevant today. Okay, so what do I mean by that? Is one of the challenges with trading is being able to hold the bigger picture while you're trading in the smaller time frames. I'm hoping that when you start to see the channel lines on this today, you'll realize how important some of the channel lines are and how they help us map out price action, and in particular price action right now. Okay, so now let's have a look at what we got here, yeah? So immediately you can see, again, this is October 23rd, 21st of October 2015. Just this line alone. There we have 12th of March 2020. So what does it tell you about the potential for this correction here? Is if it wanted to, it could come down and touch this line, and we're looking at 933. So that seems like a lot. Okay, let's see what else we can see here, yeah? I don't think it's going to come that far, by the way. But look, there's another line here. You can see this line here. And this one has a lot more touch points on it than this one. So would you say it's more possible or more likely that this could be the bottom? Well, if we looked at this one is 1753. That seems more feasible. Okay, so just this line alone, this is why I wanted to show it. Just this line alone here could be the line that's telling us what the bottom is here, and that this line was set here back in, you could set it here, the 30th of December 2015, 7 years ago. Touch points. There's a strong potential. It could be a touch point here as well. Okay, so that's really what I wanted to show you tonight. That's the one thing I wanted to show you, is look how relevant this is. And then the question is it going to become relevant now? When was the last time price action got this close to that line? There? No. No. And you can see, maybe we'll do this one. It looks like there's another line there. Looks like there's another line there. Again. Support, resistance, all the way back. Support, 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 resistance. Support, 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 support lost. So now support lost, and anytime support was lost on this line, what happened? Well, it dropped, went to this line. Then it went to that line. But then it broke through, nearly hit the top, bounced off it, broke through, back tested, up it went, bounced off it again. So this looks like part of the 2018 bull run. Okay. And again, look, up it went, back down, bounced off it again, bounced, rallied, lost support, back tested it, got rejected, bounced off it again, up it came, nearly touched it, came down again, broke through this time. Touched off it, rejected, eventually broke through, up and down, up and down, up and down. I'd imagine there was high drama around this time. Oh my God. And then up it went, back down, back tested, and then up we go. Break through, and then look, here we are bouncing along it. Dropped through it, came out of it, dropped onto it, broke through. What is this telling you? Anybody got any conclusions about what this is telling you? Anybody find it hard to believe that we're not going to hit this line? Anybody want to bet on it, that we're not going to hit this line? Anybody? I'll take anybody's bet. Okay, so So this is on the daily. So literally, let's do it by the day. If it happened today, it would be 1694. If it happened tomorrow, 1706. The day after, 1706. The day after, 1713. 1713. Okay, I keep getting 1713. Okay, but you get the idea. So, what do you think the chances are of it going to this line? Does anybody not think it's going to this line? Just from the bit that we looked at? I think the scarier question is it going to this line? Because that would make it about, if you gave it a little bit of time there, that would be, there's the end of February, it'd be $927. And then is this the end? We're going into a bear market. Goodbye, good luck. See you later. I would suggest not. I would suggest, and I was looking at this earlier, do you see this here? I think this here is that there. Is that there? That's what I think this is. See this here? All this movement here is this here. And that I think we have this to go. I think this is what has to go. Okay? So people are talking about, is it the bear market? Is it the bear market? Is if you look at the trend, you got to turn your mic off. Hector, I think it's Hector. Yeah. So I think, now I had to put some more. I'm going to do a fib. I'll put some more fibs on this. Let's take this at the bottom. There's the top. I'm just doing it here. Look, see here, and this brings us to 2272. There's the peak.
They won't have school tomorrow.
So you Julie, you got to turn your mic off, please. Unless you want to chat or you have something to say, no problem. But other than that, just keep your mic off, or else we'll hear all the juicy gossip. So if we did the same thing, here, okay, so this is the bottom, rallies. If we started this, there, okay, if we put this fib on here and we went to there, did the same thing to the peak, we look for the 272. That seems like a lot, doesn't it? ETH is going to be 229,796 if it goes to 272. What if we brought it to the 172? 11,000. What if we went to the 1618? 31,000. We brought it to the 1414 is 17,000. So on the log scale, why is it why is this happening? Remember, remember about the way the count works? The price of ETH here is 41 cent. 41 cent. Wow. Wow. 41 cent. So you can see how much from the bottom here at 80 cent at the top of the market here, it was 1,428. That's a lot of X's. It's not going to do that this time because the diminishing returns, it's not going to go to 272. So it's going to come lower. So it's going to come lower. And if I'm right about this, which I believe I am, is this here, is this here. And this is the 1, 2, 3, 4, 5. So I think this from here is we're looking at the 1, the 2, and the 3, 4, 5. So now, if the 272 is too much, what one do we measure it off? What one seems reasonable? I honestly don't know. Does anybody have any ideas? What one seems reasonable? Here's an idea for you. Is let's stick another channel line in. We did that there. Again, I'm looking for the touch points. And let's just see what the channel line gives us. I'll bring this up here. Okay, so now if it follows along here and it comes up and touches this channel, again, that doesn't seem, this is where I get challenged with logarithmic myself, yeah, is if you look at this here, is the 168, 141, 17,000, and I'm pointing at 17,000 just as a simple figure, yeah, is with the log channel, is this just as ridiculous figures up here, yeah, doesn't work. So then how do you measure, how do you map it out? Would it make more sense to do something like that? So as the log channel goes up, is the trend line goes like that. I believe it does. But this is telling me two things. One, it's given a more realistic measure of price action. But two is what happens when this all comes to a point. What happens when this all comes to a point? Because it will eventually. And you'll see this in Eliseo, I think it's Eliseo Icario's, he's an Elliott wave guy, and he predicts that there's going to be a massive reset at some point, and possibly after the next bull run. Could be 7 or 8 years away, 5 or 6 years away. But basically what he's saying is that it'll peak, and a massive reset is literally a massive reset for all the cryptocurrencies, which it makes sense because it'll be part of, like, if you remember the dot-com bubble, is it blew up. It was a massive reset. And then after that then it became real, is it cleared the market out. And then the ones who were going to rise up rose up and came forward and established the internet as it is now. So I'd imagine that when this happens, there will be a massive clear out of cryptocurrencies, and you'll see a huge drop, and then you'll see the rise of the ones that are really going to rise. So it's also an amazing opportunity to make a lot of money here, and then to sell, wait for it to drop, and it'll be an amazing experience. So it's not a bad thing. It'll just be very volatile. But between now and then is where's it going? So now there's a bottom, there's a top, and when we run it like this, is then that 1618 starts to look more realistic when we map it like this. So that quite possibly, is it possible from here that price action finds its way all the way up to, what's this say here? Well, that says 32,000. I don't think anybody's predicting 32,000 for ETH. I know there was people predicting 20,000 before. Anybody, any thoughts? What do you think? Oh.
What I was thinking was, your thought of it having a massive reset, maybe that coincides when cryptocurrency becomes institutional, right, by government and stuff around the world, and that's that shakeout, right? Of all the coins,
Yeah, I agree with you. Yeah, absolutely. Yeah. And again, also the traders, the people who actually know what's going on. So by the time, like, there'll be a massive, like you'd imagine, by the time it happens, Bitcoin will be 500,000 or something, and then it'll drop back to 30,000 or something. It'll be a massive opportunity to make wealth, and then to sit back, wait for things to drop, and jump in again, and you'd have another decade of riding the wave, And it would also fit in with mass adoption, and a big clear out. But it's not going to happen today or tomorrow. It's years off. It's years off. But we are having a correction now. So I've brought it down to the 4 hour. So let's look at the log and see what we can see on the 4 hour. So you can see what I'm doing with this one, yeah. So now I'll go back. I'm going back because I'm looking at I'm just looking at a support line here. I'll make this one white, I think. Okay, and again, you can see because we're in log. Look how it gives us this reading. You wouldn't get this. You wouldn't get this with log off. That's what it looks like. You wouldn't get the same reading. Then log on is now you can see. Now you can see the relevance of that. You can see the relevance of that line, where you've got the support. Here's the previous all-time high. You've got support here, resistance, and then support. What's that there? 1300. So I think Matt was talking about that the other I think it was the other last week sometimes, that if it was to drop back, is that would be a really hard line to break, and that would be really bad news if it went that far. I don't expect it to go that far, but if you just look at the history of the relationship between this line and that line, it is definitely one of the realm of possibilities that this line is going to get hit. But let's look at are there other channels in here that help us recognize that, or what does it tell us? Here. So there's a divergence. There's a divergence. There's a big divergence there. So I wonder if we put a fib on this, this just broke it a little bit. And again, I'm just exploring, because again, I'm using log, and I've used it sometimes. I have some great charts on it, but I haven't used it really. I'm not that familiar with Ethereum. So I'm exploring this. And look what this gives us. 236. 236. 1897, 1900. And also look at that as a support line. There's a definite support line there. Yeah, if we brought it down lower, see the firm at that. I suppose that's the midline of it about there. So it's definitely a support line. So for sure, we could say 1900's looking promising. Possibly a spike out to 1750. The horror show of coming down to 382. Don't think it's going to happen, but that would be back down at 1,000, just over 1,000. So there's another support line there. Okay. Now I like to make my divergence lines light blue, so there it is. I'm just looking at things like this as a channel. There. And often it's not the top, but it's the supporting lines below, yeah? Make it bigger so you can see. So there's 1, 2, 3, 4 touch points there. And put touch points there. If I went all the way to there, I think I've gone too far. I think I'll use this line here as a part of the support. Now the reason being is because we already have this line and we already have this line. So if I put it to there, is it actually seems more reasonable to put it to there. Now if we come down like this, I'm going to explain why in a moment. Something like that. And if I took another line, I think it's to about here. I'm going to get this right now. I'm going to get enough touch points on it here. Is I would say that's it there. Okay. I would say there. And what we have, potentially, what it looks like, is a descending wedge. Now, what I was working on, I've been playing around with this a little bit lately. Keep coming back to it. Is the fib wedge. I'm going to bring it all the way to here. No, I'll be reasonable. I'll bring it to here. And I want to make sure I fit in all price action. So even though I put the blue line here, I'm not leaving out this price action here. And then I want to bring it back to fitting in all the price action from there. I was going to put it to there, but I said no, I'll put it to here. It's more realistic. Okay, but I'm still using this as a line, yeah. So now, excuse me. I remember Extra Strategy and I were talking, God, maybe a month ago, 6 weeks ago, that 70% of breakouts happen in the red section, in the 236. 30% of breakouts happen in the 382. So in this descending wedge, there's still movement here before the breakout. So there's still a drop. So this could be just the one drop, you know, or it could go a little bit sideways and do another little drop, come onto the yellow line, enter into the 236, and then off it goes. But either way, it definitely looks like it's coming into this space. Look at this line here. That looks like a very reasonable space for it to hit. 1900, hitting the bottom. Maybe another little rise and another drop, and then off it goes. Okay. I'll take this out. Take this out for now. And trying to see if there's anything else that we can. I'm very much looking at what's relevant in this space. You know, this is what I'm looking at, the relevance of what's going on here, and just localizing it with, look, I used a couple of the log, a couple of trend lines, support lines, a divergence line, channel lines for a wedge, and then the fib wedge. They're all the indicators I'm using, yeah? Has anybody any questions? Any thoughts? I think it's fairly self-explanatory, yeah? I would like to try and explore how to read, how to get a better measure on this. How to get a better measure on this. Just out of curiosity. Go to here. Definitely a monthly arc. I'm going to make this purple. There we go. Now, one of the ways you would do it, the log is a little different, but we'll do it anyway. From the previous, from the bottom to the top of an arc, generally predicts the top of the next one. But in this circumstances with the log, it's more challenging to read it, because we'd normally be looking at the 168, and with a lot of volume is the 272. But this is crazy figures in the log system, so even if we brought it down to the 21272, it's still, well, it's 10,000. Okay. Okay, I'll take it back. It's not an outrageous number. It's certainly not an outrageous number. Is bringing it to the 272 is, I'm reading that right? Yeah, 9,952. Where if we went up to the 414, now we're at 27,000. And to be honest, I've heard those prices, but I haven't heard those prices since the early on in the year. In those prices were being thrown around, 20 plus 25 grand were being thrown around early last year. And then I think as the year went sideways and was doing corrections, is those figures were sort of taken off the table. People stopped talking about them because in the timeline they were being projected was the normal 4-year cycle, which was meant to have its blow off top. We're meant to be already done by now, and it didn't happen. So those figures were sort of pulled back a lot more. You know, people, a lot of the people I was listening to on YouTube just basically said they didn't know. However, if you look at it at this level and this way over a longer period of time, is if it went to 414 here, it's 27,000. If it went to the 272, it's 10,000. Okay. Now that's just if it comes down here, does its thing, breaks up, and keeps going. If it just kept going along here, just bubbling along here, is by the time it hit October 2022, just if it just kept going along here, it would be 10,200. If this is a 1, a 2, 3, 4, 5, and remember this is in log scale, so look at the size of this. This is like 43 cents, $20, $400, $13.53. So that while this, you can see the exponential growth of this, the numbers, the values are still very low. So now, seeing the growth of this, we go, this doesn't look very much, but on the log scale, it is. Like there is 1,353. Here is 4,900. So between here and there, is an extra $3,500. So it's a big space. So as you go up, the smaller the space, the bigger it is. So for it to go up here, it's $28. 28,000, Jesus, 28,000, sorry, 10,000. So it's a big deal. But how do you use the fibs on it? That's the thing I'm trying to figure out. Is here's the breakout. Here's the breakout. So if this is the breakout, then putting the fib from here to here. Again, I'm following the same process as this. So from here to here, and there's the 272. So that first wave from 0 to 1, I map it out. Look, it comes back down, hits the golden pocket, and then up it goes to the 272. So it's all very neat and tidy. You know, so if I apply the same, that's what I'm doing. If I apply the same to the breakout, so the 1 to the 2, okay. Now this is where it might get a little bit more painful. It might be a little bit more painful if this is correct. What I've done here. There it is there. Let's not be shocking the system any more than we have to. Right there. I'm zooming in here because this, on the log, a little bit out here can be a lot when you go up to the top. So, okay, I'm going to start it there. So if we follow the same principle, the 1, because this is slightly higher, heading for the 2, down at the golden pocket. Oh, no, that's okay. 1666. Excuse me. 1666. That's sort of telling us that it's taken a bigger trip down, which indicates to me, do I move this? Do I move this here? Is this more correct? Which seems like it. Because what I'm looking for, the top, predicting the bottom. And the fib here is suggesting to me that this is more where the fib is. Here's this trend line. And that when I run along here, resistance, support, support. So it's more solid than where I had it. And bingo, right there. So now if we do this, and we do this, and we're going to now test that fib wedge again. Now, I don't think we're going to get it. I don't think this fib result is going to be as because the wedge is I think I'll need to bring it a bit more generous that way. That way there. Okay. Now I'm going to put this on here again. So here we go. Now I think this time I'm going to do two things. I'm going to do it here to there. And you see this here is coming down to the golden pocket here. We're still not in this space. So now I think what I need to do is include this. I was going to do it originally, and I thought it was too much. But now when I look at this here, is the reason why I was going to include it because it's part of price action. This trend line, this wedge, it's part of it. And I think it should be included. And my other indications are helping me confirm that. And I'll tell you why now. Because when we put this on now to here to there, what it does is that it brings these two ranges within range of price action that seems realistic. Now I'm not fitting things to fit the space, I'm testing the boundaries to see where there's confluence. So look at how the golden pocket, look how I got the golden pocket by back testing it to this. So it worked here and it worked sweetly. So I apply the same here, and that's giving me a confidence for this yellow trend line here. That gives me the confidence to use the wedge all the way to here, which I debated about originally, and now it's making more sense to do it to that. Because price action comes down, and as soon as it breaks this, and again, oh, now that's another thing actually. That's another thing I struggle with the wedges. Do you see what happened there? See this here? Is this I don't understand about the wedges. Look at that there. So this confuses me because when you move like this, trend lines stay where they are. Like the trend line is the trend line. Where with the wedge here, look at the way it moves it. So look, now we're well within it. Now we're way out of it. So which is it? I don't know. I honestly don't know. But what I do know is that irregardless of whether it's here or whether it's there, is it's still within a range. It's still, look at this line here, look at the golden pocket, look at this line here. Now watch how this, maybe it's me not just understanding the logarithmic. Do you see it's doing this? No. It's doing this motion like this. So I think on the log scale, nothing has changed. It's just I'm zooming it out and I'm zooming it in. Okay, but yet this always stays in line with this. So anyway, the point I'm trying to make is that within the range, whether I do this or not, see this here? The range, if this drops and comes down onto here, it still comes into the 382. No matter, look, even if I put it up here, if it comes down here, it's still in the 382. I want to zoom it in like this. Now it's in the 382. So I don't know, to be honest. But what I do know is that if this breaks down, what we're looking to see is confluence on the golden pocket and this trend line. And within the wedge is breakout territory is 30% here, 70% here. So it would be coming into this range. That for sure we know. Okay. So I would be very, very surprised if it doesn't come down to 1700. Can we see any reason why it wouldn't? Well, there's one there. Is the 786. Is it broke through? It came back. It back tested, and it failed. It broke up through it. So now it's coming back down to test the 786 again. So I suppose the question is that if it breaks to 786, is next one is 702, and then the golden pocket. So I suppose we'd want to see it come down and break the 786 again, which would be 2,531. Is then another point for the 702 is 1,962. And we also have this support line at 1,896. Okay. And I think the bottom is here, the golden pocket. Because what I think is happening is we're having this correction in preparation for glory. This beautiful, glorious experience has still yet to be had. And let's see if we can put a triangle on that. Here we go. Now, the challenge is, how far do we go? Let me just put it. We just have it on that. Okay, so here's the thought for you: is I'm going to put it to there, because I think that you see this here, hits here, comes up here, comes back down, down. I think in the correction after this breakout, after this bull hit, is I think it's going to come back down, hit this line. So I think it's actually correct to have the arc all the way to there. All the way to there. Okay. The only challenge is where do we place the top? Where do we place it? Maybe something like that. 414 is at 17,000. There we go all the way to 28. You see, I think 17,000 is quite nice. The only thing is look how long. This here took from the 27th of December 16, so to the 11th of January 18. So a year and 13 months. Essentially a year and 13 months. So let's say we get here in the next couple of days or so. We're at the 17th of February. And again, this is going to take longer because the cycles are taking longer. But there is the 17th of February 23. There's the 20th of March 23. And it's definitely going to take a little longer because all these cycles are stretching out. So let's say we even went as far as September. There's June, September, middle, let's say about here. So now this is what I'm now thinking is with the fib here at the 414, and I'm not discounting the 618. I'm not discounting, there's 32,000. I'm not discounting that. Is how do we, and that would, if Ethereum went, and again, my maths could be wrong on this, if with 3 trillion Ethereum went to just under 5,000, is 10 trillion would get Ethereum to 17,000 or so. I don't know whether I'm right to think like that. I'm going to wind this up pretty soon. I'm just trying to think of these lines here. These lines here. Can I find a better way? Can I find a better way to map them out? If I put this here, see, there's support, resistance, resistance. Okay. So there's a line. That's reasonable. If you get what I'm trying to do. There's that line there. So if it just come up, if it wanted to come down here and then go crazy and come up here, and there we're looking at the line being hit later in 2022. I don't know. I honestly don't know. I think this 414 is on the 272, the 10,900, the 17,000. I think both of those are legitimate targets. Is what I'm trying to do is recognize the trend lines that help support that, and that's being a little bit of a challenge because of the fibs. It just doesn't work. It doesn't work the same. It doesn't work the same. It doesn't work the same. So how do I get it to work? I remember I did this before. Oh, wrong one. Okay, no, it doesn't matter. No. Okay. So let me clear out this fib here. Makes it a little bit tidier. So there is a 10, and there is a 17. I think either one of those is a very reasonable target. To be honest, I think the 17 is more realistic. More realistic, or somewhere on this line. There you go. Is if you look at this channel here, the touch is if you just followed it up, there's price action here. If we just followed it up right now, if you went right up from here, it's 9,792. In July, it's 16,900. I'm not sure how realistic that is.
That's just hard to believe, isn't it? It's like even half that, it would be exciting.
Yeah, yeah, yeah. Like it again. It could again hit here, and it could decide to stay. Like, look, it could do this. It could be doing this. You know, you could have, you could have a lot of sideways like this. Although this is the thing. This is the thing. If we are where I think we are, which is this, is we get it. It comes down and hits this. It gets a double bottom. There's Ethereum's double bottom. You know, this double bottom happened 6th of December to the 29th of December. And that was a couple of weeks of a double bottom, and then off it went. So it didn't go sideways for ages, but it did, if you have a look at this, from the 6th of December until the 11th of March. So now that's actually more interesting, because look, the 6th of December, January, February, 3 months. So it did this, it got all the way back up here. So it took 3 months, 3 months and a week to get back here. And then it took off. So now, if we end up down here, let's say next couple of days, let's say the 15th of February, it's 3 months. February, March, April, May, middle of May. So middle of May, there's the 10th of May. 10th of May is you're looking at around 5,700. But that's only to get back up into this line. Again, before it continues on for its breakout. And even if it wanted to go, now look at what this did. Look how fast it went here. From the 13th of March to the 15th of June. April, May, June. 3 months. Just this here, not that. No, I will do that. That's the peak. The 12th of March to 12th of January. Okay, that's a long run. What's that? 9 months. See, this is where it gets a little bit more challenging doing it this way, because here where were we? What were we on here? May, wasn't it the 10th of May or something? 10th of May, just to get back up to here. And then if we had 9 months from May, January, February, March, April, May. So back to February 2023. There's February 2023. Even if it just stayed on this line, it would be 13,700. Price action got to here. Price action got to here. You see, this is the thing. I'm going by the dates, but when I bring it back to here, here's a touch in that line. Anyway, we just have to play it out, map it out as we go along. I firmly believe this is where we are, and we're coming to this for that. It looks like it's coming to hit this line, just from past experience. The fibs hit this line as well. And then the wedge, it brings it down into the breakout territory for the breakout. So, anybody any thoughts? Will I move on to Bitcoin?
No.
Okay, I'll share this chart later on as well. Yeah. And partly why I wanted to show you this is I want you to start looking at the bigger time frames, and the logarithmic is very good for that. And these lines these lines are real and they're relevant. Like look at the part this line played in this. And this line was set here. And look at the part it played. This line here wasn't established until this happened. This line was established years later. Look at this. And most likely, now, years later again, here we are at it again. So have a study of this and just start informing yourself about the long-term channels and lines and using the log. But there you go. Okay, so let's have a look at Bitcoin. Let's have a look at price action as well. How's price action doing? Okay. Now, here's Bitcoin. Ooh. I was looking at this earlier on with Alex, and here's Johnny. Here's Bitcoin, and now this relates to what we were looking at with Ethereum. Here's Bitcoin on the monthly, and here's the 20. The white is the 20 EMA, the grey is the 21 EMA, and the pink is the 20 MA. So you can see the battle that's gone on here. It was sitting a little lower on it, but if this breaks, the Bollinger Band is 28,465. I think that would equate to 1,700 with Ethereum. I think it would match. I think it would match the same. Yeah. So now let's pull out a log chart and see what the log chart tells us about Bitcoin, and relating it to this. So new layout. Let me just blacken this out. There's that there. So now partly why I'm showing you this as well is the bigger the picture you can see and the clearer you can see it, there's a confidence that comes with it with regards price action. And also what's possible and what's not, because you can look at 17.2 or 17,000 or 1,700 Ethereum and just not want to believe it. And so many people don't want to believe it. You know, and some of the TA will tell you it's possible, and other TA will give you a different version, a lesser version. But when you pull out the log and you look at those long time frames, and you look at the touch points, you stick a fib on it. It's telling you something. It's telling you something, and the fact that the same measurements fit last time in the same part of the pattern is a strong indication that it could be happening again. So now here is Bitcoin. Look at this. So now this is Ethereum. Okay, forgot to change it. BTC. And Bitstamp, because it gives us one of the longest charts. Look at this. Now even Bitstamp doesn't give us all. It goes back as far as 2011, and I believe there is also stuff all the way back to 2009, I believe. That guy I was talking about earlier on, Alessio Sakari, he's a Elliott Wave guy, and he's very good. But he did a chart on Bitcoin to here and it gave one reading, and then a couple of people told him that there's more, so he went off and he found the full chart, and it gave him a very different reading, because there was a 1, 2, 3, 4, 5. He wasn't getting the 1, 2 here, and then when he got the 1, 2 here, it changed his reading, you know, and that's the chart. That's the video where he predicts the big crash, which is essentially sometime after the next inverted commas bull run, which I don't think will be. I think it's just going to be continuous peak and trough. I think sometime later on this decade, we're heading that way, you know. Okay, so
I believe there is a chart for all history.
Say again?
There is a chart for all-time history.
Where's that?
There is one called all-time history, Bitcoin.
Oh, you. Do I need to?
Yes.
Do I need to literally type it in?
No, just BTC USD.
Yeah.
And it should be, yep, you're a step up.
Yeah.
More up. Yeah.
Okay. Oh, very good.
The index.
Ah, okay. Let's see.
So that will bring you back to 2011.
Yeah,
or 2010.
Yeah, 2010. Okay, yeah, 20. Ah, I see. There's the extra bit. There we go. Thank you.
You're welcome.
I was trying to find that before. I didn't realize it was there. Okay, so now look at this monster. Even on the log, it's a challenge to fit all this in. Maybe we'll do the weekly just for, or the 2-day, just for a. No, let's see if we can fit it on the day. Look at this. Okay, so now let's look for a support line. I'm looking for a support line. Look at this. What's the price here? Wow, 1 cent. 1 cent. 1 cent. Look at that. I'm doing it. I'm doing it. Now, there we go. Look at that. It's only broke this line twice, right at the beginning, and it hasn't broken it since. Let me just zoom right in here to make sure that I'm getting it. Okay. There we go. Okay. So you would imagine that possibly that this divergence line, possibly when it breaks this divergence line, it's not going to be a good story. It won't be pleasant. Just out of curiosity, just say from the top. Let's say this was the top. Okay. Just out of nosiness. And I said, okay, there's the top, and I bring it all the way to the bottom. And let's just say here. And it came all the way back to the golden pocket. $10. Okay. $10. Yeah. Okay. That just that's ridiculous. So what if we did it the other way? I'm just being curious now. I'm just playing, you know. If we went to here, okay. Golden pocket, $500. Yeah, just being ridiculous. Okay, so I'm leaving that in because I've seen way too many times that these are relevant. It just when it's relevant, it could be a long time off before it is. But I wouldn't feel good with seeing it coming to this line. If it broke this line, I wouldn't feel good at all. Well, not unless I've sold at the top and I'm in massive shorts and I'm ready to buy at the bottom. Then I would be totally excited about it. But anyway, so is there other lines here? I'm looking for, like, there's a touch point here. I'm just trying to see. I'm trying to see where I can get a reasonable. Like, where is it? If I clone this, I just simply put that there like that. Like, I've got a nice tidy touch point there. Ah, I like that. I like that. Okay, so look at this here. Look at this right. Look at that, right up to there. So let's zoom in on this just for a sec, yeah? Like, this is all the way back in 2010. There's resistance and resistance. 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 Get it right on it. There we go. A little bit of support there. Support. Up we go. And when it comes through here, look at this. Is what it spikes through. Look how it hits that red line there. That secondary one for support. Just nudge it a little bit more to that. So now, look at this here. Look at this here. This really triggers me here when I want it to match here so neatly, but yet it's up above it. It just misses it. It twitches me, you know. I want it to be perfect. I want it to fit perfectly. Okay, let's leave it there. So look, it looks like we're at least dropping to this line. $33. But look, we had a spike out before. Just out of curiosity, that spike out was 11.3%. If we had the same spike out for 11.3%, there you go, it will be 29,145. Okay, interesting. Let's look for, obviously, a support line. There it is, right there. That would be desperate times, 20,000. So you can see why people talk about 20,000. It could go to 20,000 because it's been an all-time high. It hit it, and again, all-time high. They have a tendency to hit it, get rejected. Nearly got it. I actually remember this. Nearly frustrated people, hit it, rejected, and everybody got super excited. Third time, up it goes. I actually remember that. So here's another line here. Let's make this white. And I suppose this fits in with 29,000, because again, this line here is a support line. So again, it looks like it's either going to be a 33 or a 29. Now let's see what else we can do here to try and help us discern what's going to happen. There's a definite channel. Let's zoom in a little bit. Nice, neat touch points. Again, you see those touch points. Touch, touch, drop, touch, drop, touch, touch, drop, touch, touch, drop, touch, 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 touch. If this follows the same, see how it does this? 1, 2, then the slide and drop. 1, 2, then the slide and drop. So if it's to do the same thing, 1, 2, 1, 2, 1, 1, 2, or 1, 2, then the slide, or 1, 2, then the slide and drop. So here, 1, 2, slide, 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 and then the drop. So if that was to follow in the same pattern, is again I think the 29 is more realistic than the 33. Maybe it just wants to do a double bottom of 33. Again, I'm not jumping into the MAs. I know the MAs here for sure are telling you 29 is absolutely possible. To be honest, the MAs telling you 20 could be possible. It's ridiculous. The MAs are I know they can turn on a dime, even the bigger time frames. Once they turn, they turn. Excuse me, but on all the coins I'm looking at, the MAs are the longer time frames are like there could be another month of downtrend. Like the month that turned is still massively down. Now I know it can turn in the first week or two, but the 1 week, the 2 week, and the 3 week on all of them is still saying down, down, down. So we definitely need to see at least 1 week turn proper, you know. Anyway, so now we got to figure out. You notice I'm staying away from channels a little bit. I'm trying not to. I'm more looking for wedges. I just feel like it's a wedgie going on here of some sort. Okay, so I think that's fairly obvious down there. I'm just curious. Is I always like my tops that predict the bottoms. there. See, sometimes they pass. You know, it could be past it like that. That looks nice there. Nice and neat and tidy. Support or resistance, resistance, support, support. So there's a nice spread there, a bit of resistance there. Again, that's down at 23.6, 24. I know some people quoted that one as well. Let's just do this out of curiosity. If we did that there.
I have a line I'm suggesting.
Suggesting what?
I have a line starting from, just give me 1 sec, let me go to it.
Yeah, go for it, Chet. Okay.
April 5th, 2011.
Yeah.
And that's the first touch point, and then second touch point will be on March 2020. March 12, 2020.
March 12, 20. So give me that first date again.
April 2011.
April 2011. So there's 2011.
Yeah, way back when it was doing the correction.
2011. April 2011. December 2010. April 2011, yeah?
The bottom on April 4th.
You have are you doing this here like this? Is that what you mean there?
Yeah, this one to March, yeah.
Yeah. All the way.
And that will, and if that intersects with the last top, it will bring me 27.
Yeah, say that again.
Connecting this line intersecting with the tops that we have, the lines that you have from April 2021, the white lines that you have over here.
Oh, here.
Yeah. So the top predicts the bottom, and this top was in April 21. That was support. That was resistance, and then turned it as a support in September 21.
Oh, I see what you're doing there. Go on ahead.
If it meets that line just drawn, it will bring me 27.
27 where? 20.
Sorry.
Oh, my apologies. Sorry. Oh. Yeah, this is what I'm trying to figure out. Where are you? Yeah, so this is the line I put in that you said, yeah? So here we are up here.
Yeah.
There's a beautiful touch all along here. Touch. Look how sweet that is. So where are you saying it's going to, where are you getting 27 from? This line here or?
The one below it.
This one? This one here? No?
Yes. No, not this one. Okay, sorry. Because my line's in. Yes, this. The last blue line that you have up until it reaches. Why it's not reaching in yours?
The last blue line. This line here.
No, the other one.
This one.
Yeah.
Okay.
It's bringing me 27 when intersecting with this guy.
Sorry. Now I'm getting. So now here. These two crossing through, isn't that what you're talking about?
Yes.
Now I get you. Okay. Yes. Yeah. Oh, to here. I'm with you now. Okay.
But on mine, when I was drawing them, it's bringing on February 18th, something like that. They will intersect.
Now I'm with you. Okay. Yes. Yeah. I got you. Okay. Yeah. It seems to be. It's possible. It's definitely possible. So now if I put these here like this, I'm gonna do this one first. Okay. So now I don't think this works. It's too far away. So I think it's better working to here because these lines are this is being used as much as this line is being, these are being used as resistance, but they're part of this line. So that's why I think they should be in. And also it makes more sense with regards being more realistic with the breakout zone. So again, if this came down, there's the 28. Yeah, it might nick into the 386. I know we can do this as well, although it's not, doesn't seem to have the same effect there. Okay. Yeah, this is definitely in the breakup zone. You can see why people were so many times going, oh, this is going to break out. All the moon people is, oh, it's going to break out. Oh, it's going to break out. No, it's breaking out now. This time it's breaking out. No, it's breaking out now. Oh, I can't believe it. It's breaking out now. Even this one, oh, it's breaking out now. And then it drops again. Possibly. So you reckon, is that Farouk, is it? Farouk, is that you? Who's talking?
Yeah, it's me, Farouk.
Farouk, do you reckon it's going to 27?
Yep, that's my playing around with the logs.
Yeah.
That's where I'm getting my number. And it came to 30, like I was expecting 33A from the top of October 21st.
Yeah.
And it came and it came below it, but
yeah,
like if you have a divergence line between October 21st from that top,
October 21st, October 21st, yeah,
and have a divergence line through the bottom, it will meet to this bottom at 33.2 or something.
Like this here, is it?
Yeah.
To here. So, something like that?
Yeah.
Yeah.
Yeah. Something like that.
Yeah, totally, yeah, those center lines are super. I'm just looking for something here. No. Yeah, this one here could be a discussion about a double bottom here. I don't think it will, because again I'm looking at the moving averages, but you could have a double bottom here where it hits this one, comes down, hits this one, you got a double bottom, even come back, hit this one, you got a triple bottom, and then out it goes. It could do that, although the moving averages are telling me, it has more. It's just going to push through. So anybody else, any other thoughts while we're here? Anybody? Okay, so just a very quick review. It's the same with the support lines here. Look at what it does here. Okay. And breaks through again, spikes through. That red line is the support. Comes up, gets rejected, runs along, gets rejected, runs along, breaks out. So the two times that it has broken this line and come back into it, it's come to this one. Even this spike out, it still come back to this line, and then up it went. It broke through, it came to this line before up it went. So Did a spike through and it came back down. Did a spike through and it came back down. So I think we can definitely say it's going to hit this yellow line. So I definitely think 33 is on the cards for sure. But will it come through all the way to 28, 29, 27? Is Ethereum is looking like it's going to come to 17 and 1700 or so. I think if Ethereum is going to come to 1700, it looks like BTC would also come to the late 20s. But we'll have to play. We'll have to play it by ear, see what happens. Okay. So now, last thought is let's have a look at the arcs. This is one here. There's one here. This is 2013. There's the bottom. 15. There's the breakout. And there is 18. Here's the breakout. And this is an interesting one because look how neat and tidy this impulse is. Look how neat and tidy this impulse is. Again, neat and tidy. But you can see how sharp this one is. A little bit more of an angle on this one, with a bit of a bow in it. And look at the bow of this one. So you can see from a sharp move to a bowing to just it's like a curve. This one here, is odd. Is odd compared to the rest. The question is, how do you map it out? So let's have a look at this. Because remember doing this before. If we put a fib from the bottom to the top, 618. Actually, I'll leave that there like that. 618. And then if we do this here, from the bottom to the top, 618. It's so neat and tidy for Bitcoin. This one here, to the top, 618 is 178,493. The only question is how long? From this one took 5th of October 2010 to 11th of June 2011. Is that 6 months? June. No, October, November, December. 8 months. 8 months. And this one here on 1st of November to the 3rd of December 2013, 2012 November, 11 months. 8 months, 11 months. And this one, the 29th of July, let's say June, 1st of June to the 19th of December. Hang on, when was that June? 16 to December 17. So
6.
No, 18. No, because this is 2016. This is August 16 to 17 to December 17. So hang on. 16 months, isn't it? From 8. What did we say this one was? November 12 to 13. So 8, 13, 16. So 8, 13, 16. This one we would have to easily put 8, 13, 16, 18, 19, 20. So if this was the October 2020, the year is October 21. Is that right? I have to go longer, yeah. Hang on. No, this is August 16. December 17. Yeah, okay. Okay, so now this is October, let's say November 20. And we're already at February 22. So October, November. So 11, 12. We're at 12 months. No, we're not 12. We're at 14 months so far. Isn't that right? Yeah, November, December, all the way to the end of the year. That's 14, 15. We're at 15 months so far. So we could have probably another 5 months, maybe. A little less, a little bit more. So from February, and include February 1, February, March, April, May, June. May, June. Let's go to the end of June. So the end of June, even if we just follow this yellow line, just till the end of June is 92,000. Just to the end of June, to there. And that would bring us to the 414. The 414 at 88,000. However, the last 1 and 2 and 3, they all went to the 618. So 3 of them went to the 618. Maybe we should stick with the 618 for now. And if that was the case, we would have to the 618 by there's June 22. That's the peak. Again, we're going to have our correction somewhere along the way, wherever it may go. I don't know. I don't know where to put this. Although, let's just put it here for now. No, let's put it there. Okay, so now, if this fits in 29th of June, it may be longer. It may draw out longer. But it still looks like the 618 is at 176,000 or so, 178,000. Just following along with what's already gone. So now let's have a look at the fib on this, because we haven't put the fib on this. But let's back test it before we do. Remember we put the fib on ETH and we got the golden pocket? So we got the pump. You see, this is the thing. Where is it like this? Is this where we are? Does that make sense? It runs along here and you got this and you got this. Is this, or is this where we are? Ah, this is where we are. You see these two little humps here? See these two little humps where one is slightly higher than the other? That's what happened here. This one is slightly higher than that. So I think maybe we're just here in the pattern, so to speak. And you see that long lead in there where it looks like we could be getting another pump, reset, or retrace, pump, retrace, pump, retrace, up we come. And you can see this one here is more relatable to this one, where this part of it is getting exaggerated. Because look, it didn't happen here because of the, look at just the angle it's kicking in it, is you got ledges here. Where here it's more of a rolling slope, and here it's just drumlins, small hills. So I'm not sure how to I'm going to go into this one. I'm going to measure this one just to see. So let's say this is the bottom, and to here, if we put a fib on it, does it bring us to, oh, let me do it the other way. From the bottom to the top. Aha! There's the fib. Bingo! Look at that there. So from the bottom to the top, look at this, look at that, and then a reset. So we have it there. And this one is definitely more relatable to the one ahead, but I don't see it here. I don't think it's relatable. No, it's not. But if we did the same, we did the same here. Now, I think maybe we'll put this as the bottom, because if you remember, we used this as the bottom. Look at that drop. So I think it's only fair that we do the same on this one. We call this the bottom. So now, when we put the fib on it, all the way to the bottom, I think I did that backwards again. No, it should be done this way, isn't it? Yeah, from the top, from the bottom to the top. Excuse me. Let's see what we get here. Drum roll. Golden pocket is down at 25. Okay. Is what's more in line with what we have so far is the 272. Is the 272 seems to be more in line. I've got to straighten this line. The 272 seems to be it. If I put the fib back to where I had it as the breakout here, as the base here, rather than here to here, just out of curiosity, what does it give us? Okay, well that puts, and there's a lot of lines here, that puts, look at that, there's the fib right there. It's already hit the fib here. So yeah, there's the fib there. So yeah, that's it's convenient and it's not convenient, because that's where we started on the other one. And in fairness, this is where the Elliott wave begins. The Elliott wave doesn't begin here, it begins there. So if I had to choose, I would choose here because I did the same on the last one. And if that's the case, is rather than the golden pocket giving us the touch, is if you look at the 786 here, it broke through, came back up, it broke through again. It looks like it could be coming back up to back test the 786. And again, the touch, the drop, the touch, the big drop, the touch, drop, touch, drop, touch, drop, touch. So it looks like we're in for a few candles. And these are over days though. Could we be more sideways for another 3 or 4 days before it touches and then drops? Okay. So it looks like for sure that it's going to come down to the next fib line, which would be the 702 at 29.588. Let's not think about it going to the golden pocket here at 25. But we can deal with that. If it hits here and looks like it wants to continue, is if it wanted to do one of these, now see there's a thing, from here to the top is 42%. From, let's say, fuck it, we'll do it. There's 54%. What about this here? 43. Yeah. Yeah, it seems things to watch for is Bitcoin at 34 and a half, 35. This line here, 32, 33 is a biggie. Again, if it breaks this, it's heading for the 29. If it breaks the 29, and the fib is at 25 and 23. Okay. Okay, anybody any more thoughts? Is for me with this is again back to the moving averages. The moving averages are the thing that tips the scales for me with regards its full potential. I know some guys look at the liquidity pools, so it'd be interesting to hear what you guys have with regards to liquidity pools and what targets they have set. It'd be interesting to hear. Okay, so now it's 2 minutes to 12. I'll happily do XRP if you guys are happy to, if you want me to do it, or we can do it another time. So, because I'm going for what, 2 hours. So, do you want to do XRP, or we leave it for another time? Maybe you're sitting there watching Starsky and Hutch or something.
I mean, I don't mind. It's how what you're comfortable with, Roy.
Okay, all right. Well, let's have a look at it. Yeah. Just having a quick look at the trade here as well. I'm looking at the 2 hour. I see there was a spike through. I see there was a spike through. Have I got my? I have it here. Yeah. Okay. Let me change the let me change the chart. Okay. Okay. Everybody sees that there, yeah?
Yeah.
Great. Okay, there's the VWAP. Now, let's just check. Are we on a correction already? Here's the 5. Here's the 5. There's the bottom. 1, 2. There's the push away. We'll find a W in there, maybe. 3, 4, 5. So 1, 2, 3, 4, 5. Definitely looks like the Elliott wave is complete. So we're moving into a correction. Fingers crossed. Hit the 800 MA here. And again, always at the start is the first minute or two when the VWAP does this is it goes one color and then it has a tendency to do another color. So if it's red here, first minute or two, and then after that it has a tendency to go green, yeah? However, lately it has not. Is over the last week, a couple of times the VWAP has done this, and it's being on the, it's at the correction. The top is in, and the correction is in now, and here we are in the correction on the 5 minute, and the VWAP becomes a resistance and creates that push down. Now, so we'll see. We'll see if it wants to do that. How far did it get up? It got up as far as 61.37. Okay. Yeah, you see, that's what I was saying about the oh, what is it? I think it's the 2 week. Is it a 2 week? Yeah, like I know there'll be a bit of a push up, but yeah, here it is. Here, look, there's the 50 really fighting a resistance here, and then the 55 EMA and the 50 MA is if these guys can hold, I don't think there'll be a big retrace up to 66 or 68. So it's just a question of whether these can hold. At the moment, this has just done a Elliott wave, and it's due now for its correction. So if we just go to the 5 minute here, back to the 5 minute, and we'll stick a fib on this just to see. Now it's only a 5 minute, so it's like it's not like a big move. So just a simple, yeah, it was right there. So we could be looking at it coming back down to 59.70, 59.30, but 59.50. So I think there'll be a natural correction back to that at least until it decides what it wants to do. Yeah. Let's have a look at the 15-minute and where that is. So I'll pull this over. Sorry, can you guys see? I noticed I hadn't got my screen fully opened.
Yep.
Okay, great. Okay. So one of the things I was looking at here about it popping up to 68 is last time, like I did this was feckin' torturous last time because I was in a great position and then I was like, what the hell's going on? So this put me in the red, you know. And I was like, oh, no problem. Look, it's breaking out. There it is. You know, that's the blow off top. It's all good, you know. And then we got this going on. I was like, yay, look, we're heading down. And I was like, where the hell did this come from? And again, fake out before the breakout. Even the stress of this, down again. Here we go. Oh, it's gone back up again, and get very close, and then dropped. So, but the point I'm trying to make is in the pattern that played out is when it came down here it was a lot of sideways and a lot of sideways and then a pumped, yeah. Where on this one is, actually I'll go back to here for a second. When it dropped down here, look how low the sideways was and then the pump up. This is the point I'm trying to make. So there's the low and then sideways kept low until it popped. This one here is it kept low and then it came up and it would really come up. It was really pushing. So it wasn't as low. So I think possibly this is the top. Rather than a blow off top, it's quite possible that this tired out the bulls and that we're dropping is we have a small Elliott wave here. We have a small correction. Again, that could take us to this line and then maybe we have a small Elliott wave and a breakthrough and a breakdown. It may not have the fake out for the breakout. That's what I'm thinking. So, but we'll see. We'll see what it wants to do. Okay, so let's go back to the chart that we said we're going to look at. I was doing this earlier on, so I sort of have it mapped out. So we can be more efficient with this one, yeah. Here it is here. Okay. So this one here is again here it is. Here's the previous one. Previous arc. Here's the breakout. Now the trend lines I have, this is all the way back to the 11th of August 2013 and this one is the 30th of June 2017. So now this one here comes through, resistance, a little bit of support, resistance, support, support, resistance, has a touch point here, has a touch point there. They both, touch point here, touch point there, they both have a touch point here. And I love the butterfly effect that this creates, yeah? So now is the more recent one is a support line for price action right now. Similar to Bitcoin and Ethereum, they both have a support line, a long-term support line that is touching off now, but then has another one below it. And the one below it is the longer one. And this one is far more solid because of the amount of touch points up and down. So this is a true center line, so to speak. Through here, and again it comes to here, yeah. So there's this green channel I put in. This green channel. So this line touches off this green channel at 33 centers, 33.3 is, but we also have the wedge from here through here, touches here, one. So resistance, a little bit of resistance support. I'm mindful that I didn't go to these ones because it would cut it off. It would cut it off quite early. Yeah, if I went through here, so this line here fits better in with, look, resistance. Well, it doesn't really touch it there. Support. I was tempted to do this. I was tempted to do that, and that might be true as well. But then I decided to leave it there. So when I put the fib wedge on it, take it all the way to here, all the way out to the edge there. Again, this has space to drop into the 382. And again, we're dropping into the breakout zone, yeah? And again, the wedge is reversal. So dropping in here at least, even if it came down right now to there, that's 42. If it came down to the green channel, from just where it is now, again, we're looking at 37.8. There's a tendency, like Bitcoin, like Bitcoin, maybe even Ethereum, I just can't remember right now, is the touch point, it drops, then touch, drop, touch, drop. This is very much like Bitcoin. Remember this here? Drop, touch, 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 drop. Is we could be in for again that it might want to go and do a little bit of, drop a little bit even again, go a little bit sideways and go back up and touch. Back up, and if it went straight up now and touched that green line, it would be 67, 68. Touch the blue line, 67, 68. And that's what people are a little bit cautious about. And I know there's a liquidity pool, I believe, up there as well, yeah. The only thing that I think about it is that this lift here might be enough to push down, because there's a couple of resistance lines here that are really resisting it, are really strong. So I think 63 is a real challenge to break. It might break it. It might want to go all the way over here again to touch off these channels, but this is bloody days away. This is another 1, 2, 3, 4, 5. You know, it might go up sooner, but still a couple of days just to get this before we get the drop. Yeah. So now these support lines here as well, these pink lines, I think I have them as white on the other one, so let me make them white. So you can see very solid line here. Again, another one and another one. There's that one at 17, at 27.8 and 36.3. There's another one there I could put in a 52, but I definitely think it's going to break 52, so I didn't put it in, yeah. Is putting a fib on it. Again, if I go from the bottom here to the top, I keep doing this wrong. From the top to the bottom here. Okay, when I put a fib on it from the top to the bottom here, the fib golden pocket is again, because I know there's a lot of lines here, is the white line. Do you remember the white line from all the way back? And the golden pocket are meeting right there. That white line from the longest one, from right back from the beginning, and the golden pocket are meeting at 34 cent. So again, it fits in with the bottom of the channel. Is if it wants to go all the way to here and then decide to drop down, and again it takes a little bit of time to drop down, is there we are on the 6th of, oh, that says the 6th of March. Jesus, really? What if we did this here? What if we said that there? The 16th of February. Okay. Seems like a long, long time away. So if it was to come down here, is look at this, drop, come up, drop, rise, drop, drop or a little rise, or whatever it decides to do. If it came straight down, is that would be all the way from where it is there, and say the top of this here, 84%, 78%. Wow. Okay. Am I reading that right? Okay, I'm coming down. 43%. Okay. Okay. So what support lines are along the way is here is the 05 at 47, 48. Again, that's one that's been talked about as a bottom. The wedge here, again 41, another one that's been talked about. This support line here at 36, 36 and a half, and then the golden pocket at 34, 34 and a half. So these would be the targets along the way. Yeah. Again, why am I not talking about a breakout? I've noticed one or two people asked me lately about that. Again, back to the moving averages. They are heavily weighted to the bears. The weeklies and a lot of the dailies have been flip-flopping. I was explaining this earlier on. The weekly MAs are all bearish. All bearish. Is what's happening now is that you have the short-term ones. You've got the minutes. You've got the hour. You got the 2 hour, the 3 hour, the 4 hour. Think about those as one section. Then you've got the 6 hour, the 8 hour, the 12 hour, the daily. Think of that as another section. And then you have the multi-days, even the daily, the 2 daily, from the 3 day all the way up to the 6, 7 day, then the weeklies to the monthlies. So there's 3 different sections. The weeklies, the multi-days, and the weeklies, the multi-weeklies and the multi-weeks are all bearish. I've seen the 3 day maybe turn a little bit some days, and the 2 day. 2 day quite often, 1 day quite often as well. But what's happening is that the weeklies and the latter multi-days are staying very bearish, and you have the earlier time frames up to the 4 hour, they might turn bullish, but then the later hours and the 12 hour and the daily are bearish. So you got these 3 sections, and there's always 2 of them at the moment that are bearish, and 1 of them turns bullish. So by the time the 12 hour and the daily turn bullish, the 1 hour and the 4 hour have flipped back to bearish. And that's what keeps happening. So the bears keep dominating because they control 2 of the timelines at any one point. So you're getting these drops. When they take over all 3, you got these drops. But then you got this battle going on where the bulls push. So you've got one timeline that gives a big push, and then it loses its power and then it drops. It puts up another little battle, and then loses its power and drops. So you can see it all the way along here is that it puts up a big battle here and then drops. It puts up a battle here and then drops. So it keeps doing that. So until 2 of those sections of the timeline work with each other in a bullish pattern, the trend is still bearish. So there needs to be, I think, at least a weekly, you need to see a weekly where you get a proper turn of the VWAP or a moving average. And that week is a big turning point. And it breaks, what it does is that it breaks the power of the weeklies. So you get all those other MAs that are on the weeklies coming down, and you have the week coming up and cutting through them. And that's what needs to happen, because the shorter time frames will turn, the mid-range time frames will turn, and they're flipping and flopping, but the latter days and the weeklies have not turned yet. They're constantly bearish. So until they're broken, this is still a downtrend. Anyway, so now let's just have a quick look while we're here, because the day has turned. The day has turned. And you can see, look, because it did its Elliott wave, it's moving into its correction here, yeah? So here's this diamond, still has to be completed yet. Okay. Okay, so let's zoom out. I'll go to the monthly. I could be at these for ages, so I won't. I'm going to fly through them, yeah. So there's the monthly, and again, it is the month, so it's only the start of it. So for sure, there's lots of time. This could definitely go down, hit a bottom, and turn green. Or this could be a big spike down. You get your retrace later on the month, and then the next month is an up. But for sure, it's definitely coming to an end. And the bottom of the Bollinger Band here is 30, 34, 33 or so, yeah? You could get a spike through for sure for another 2 or 3 points. So anything all the way down to, well, that says 25. At the end of the green channel here is 28. Yeah, there you go, 30. You could get a spike down for a good few points here, yeah? Or it could just touch the Bollinger Band. Again, and then look at the length of these. So there's no doubt this is possible, yeah? Or it's the rejection and up it goes. It's just going to take maybe a day, a week, or whatever, do its thing, and then up it comes, yeah? But, excuse me, the VWAP here, the yellow line here, is pushing down. It's after breaking through the 20 MA here, that's the pink one. The 5 and 10 are still coming down, yeah? The 3 weekly, yeah, like the 3 week, the 5 here, look at this. The 5 is after breaking the 20 here, 20 MA and the 20 EMA. But this is on the 3 week, and the 5 is after cutting through the 20, and strongly cut through the 20. It's not tiddling it. It's properly cutting through it. Yeah. Now that's just a support line I have. Okay. Here's the 2 week. So again, it's still a spill as a movement. This turned on the 31st of January, and again, remember this one that we were looking at here is this is moving down a little bit more now. The 55 EMA, the 50 MA. So we'll see where that's going to go. I expect that to turn red again. Here is the weekly, and again the 100 MA I think is the one to crack. It pushed through and it got rejected. I think earlier on today I was looking at it being resistance as well, and now it's back above it, and we'll see how much support it's going to give. There's the daily or the weekly. There's the VWAP. There's the VWAP there. I'm not sure whether the VWAP is support or resistance. However, is when you look at the MAs, is look at the spill. Look at this. Like, look at the 5 coming down here. And the distance between them is perfect for pushing. Think about it on a weekly. This distance is a good position for pressure. The closer it gets, the weaker it gets actually. So if you had this wick up here, it's actually in a weaker position. Think about a big wave. You feel a big wave coming from further off, and you feel the force of it at a certain distance, but by the time the big wave is peaking, its force is gone. And that's what it's like on the higher time frames. This distance is where you feel the pressure. If it gets closer, it actually is weakening, and it's getting closer so it can turn. This is a biggie. This is the 20, this is the 50. This crossing over is a dead cross on the weekly, and the weekly is going to change again on the 7th of February. So on the 7th of February, this is going to cross over. Now sometimes you get the pressure beforehand, sometimes you get the pressure afterwards. So, but you can see the spill. This is all, there's nothing here, there's none of these turned up, you know, like the 50 is cresting here. The 6 day, again, here's the spill. Look at this. One of the reasons why there's a bit of pressure coming down here is this is the 5 crossing the 144 weighted. This is a spill at any time frame. Here's the 5 breaking the 100 MA, and it's wicking through it. It's only wicking through it now. This could wick down even more. It was more through it earlier on. Seems to be just barely. And you might think I'm splitting hairs a little bit, but it actually makes the difference between the wicks on each other and one wick past the other. But the point is that this is a 5 cutting through a 144 and cutting through 100 MA. So again, that's a lot of pressure. It's a lot of pressure coming down, and the 10 isn't too far behind as well, yeah? Here is the 10 MA cutting the 144 and the 100. Again, this is at any level. This is a very strong push down. And then again, here's the 5. Here's the 5 coming down. And again, I know this is green, but these all turned on the 31st, I believe. And again, there's a push and pull going on at the moment. It hasn't broken yet. So when we go up through the timeline, you'll see the play of it. So this is the play of it going on the weeklies. But when it breaks, these guys will be part of what are holding the pressure down and not letting up. This is what I'm trying to say. They're not letting up. Like here is the death cross on this one. Look what I got. So we got a death cross on day 6, or the weekly going to happen on the 7th of February. Again, look at this. More brutal stuff going on. Here's the 55 looking across the 100. 55 EMA looking across the 100. 10 is coming down. This is the 4-day. Look at here's the 5 in the 4-day. And again, it's this when this turned that's when this candle turned red and went down. Yeah. Again, here's the EMA. So all those days, a lot of pressure, a lot of big stuff going on. Now this one turned. Did this one turn today? This one turned yesterday. So again, now this is where, remember saying about the earlier days, the 3. Look at the VWAP is being support here. The 10 looks like it's being, or the 5 looks like it's being resistance. Again, this is the 200 MA and this is the 10 MA. There's no timeline when the 10 crosses down through the 200 where you don't get a big spill. It's such a prominent thing to happen, the 10 breaking the 200. It doesn't happen that often. On the 3-day I don't know how many times a year that this would happen, but you'd be counting them on the one hand. It doesn't happen very often. Here's the 2-day. And again, did this just change? Yes, this just changed today, the 4th. And again, you can see the bit of a turn down on the 5, but it's the 10 here. See the 10 is coming in? So you can see that the 5 came down here, gave a little bit of a push, and went down. But now look, it's turning down again for a spill. So the spill is this will go, and then these will go together. So that's what it's promising. So this is knocking out the resistance that the 2-day was having here. The lift it was having this is turning the 2-day back into a bear, so to speak. So this is the 2-day turning back. Remember I said they're flipping and flopping? This looks like the 2-day is going to turn back into the bear, so to speak. Yeah. And then the 1-day. Now, okay, what's going on here? So the 1-day. Now here is, you see, this is where you're starting to see slowly the higher time frames and the moving averages are coming down. So this is the daily, and look, the pink one, 20 MA and 20 EMA are coming more and more into play now. So this is an argument for price action bouncing up to this and then getting rejected from it. And this is at 64, 77, 65. So it would be quite difficult for this to get broken. So for it to be going up to the 66 and 68, it'd be hard to get past this. It might spike up through it a little bit to 66, but 68 I find difficult to believe. Yeah. Now here is the 5, and this is where you got to get into the nuances. Yeah, is the 5's turned up a little bit, but the 10 is turned down. So they have a tendency to cancel each other out a little bit like this. However, you see this line here? This is the medial line. This is the midline. There's the Bollinger Bands. This is the midline. And price action broke it, came down, didn't hit the Bollinger, but close to it, came back up to the medial line and got rejected, came back down and spiked through the Bollinger Band. So now you see this price action here. It's not just the 5 and the 10 here, it's the medial line that's adding weight to resistance here. And it looks like even though price or the VWAP went up to meet price action, is the VWAP is resistance. Remember it on the 5 minute is it finished its Elliott wave. So look, it finished its Elliott wave and here it is in the correction. So it's quite possible if this goes down far enough, you'll just see this line go with it. This will turn down. And we could be getting that spill. If this turns down, we might get that spill. But the day has been doing a lot of flip-flopping over the weeks. The last week or two, a lot of flip-flopping. But you can also see it's coming to an end. Here's the drop. Here's mountain peak. First drop, third spike, first drop, mountain peak, third drop, final peak, final bounce. Look at the Bollinger Bands are getting tight here. Breakout is coming. Oh, it might do a fake out, a pump before the dump, or I'm not sure where it has it in it. Why? Look how low these two are. Look how low. Here's the high, and it did a good battle up here, but it couldn't break above the 63, and it dropped down low. I'm just not sure it has the energy to go back up there. I could be wrong. Now here's the 18. I'm going to flick through these. Oh, look at this. So look at the 5 cutting through the 20 and the 10 here. I know the VWAP is coming up, but again, we're in a Elliott wave, and now we're in for the correction. So this VWAP is resistance. So now you can have the 5. There, see the 5 there? See it there? The 5, the wick of the 5 is cutting through the VWAP, which means again, that's bearish as well. It cuts through for a spill. So we could see the 5, if this wanted to spill proper, the VWAP would turn and we get the 5, the 10 and the 20 all deciding to go as well. And the medial line is in there as well. So yeah. So there's the 12. Now the 12 is such a flip-flopper. Look at all this. Look at all this flip-flopping. The 12 has been, the 12 is almost like the punching bag between the lower time frames and the dailies and the weeklies. The poor 12 is being pushed around like a I don't know what. But look at all these spikes, all these ups and downs. Look at all these here. Look at this sideways action. But now it's making a foot. You always notice, look, there's the heel. There's the arch of the foot. There's the arch, there's the ball of the foot. Here's the toe. Again, there's always, when there's a breakout, there's always one timeline where the foot is complete, where you get the toe and then it breaks out. So you'll see when we go down later in the timelines, you'll see the foot form more, yeah. But you always see the foot forming. It's always a foot. So yeah, anyway. So there's that there. Now you see, I'm mindful here, by the way, that this correction, we could just get the ABC correction to here, and then we get the pump up, the fake out for the breakout. So I'm super watchful that what happens when this correction comes in is what direction does it want to go. Are we going for spill? Are we going for fake out first? So again, here's the 9. Look, the toe is starting to form a little bit more. And again, you see things like this. Look at the 50 coming down here. So the 50 is coming down. Here's the 55 EMA. That's at 65. This is at 63. Is coming up. And here's the Bollinger Band as well. So getting past these isn't going to be so easy. Isn't going to be so easy. And again, these, this is where when you see them like this, is it could spill, or it could just as easily do a pump. Just look at this here. is the fact that this is a correction is, yeah, well, look, did this here, see this here, did this, here's an Elliott wave, here's a correction, here's an Elliott wave, here's a correction. Now, are we done with them, or are we going to have another one, and then down we come? You'll find out soon enough. Again, you can see the foot. There's the heel, there's the bridge of the foot, the ball of the foot, and look at the big toe forming here. Okay, and again, here's the 50 coming down on the 8 hour. Again, you can see these all beginning to consolidate, and as we go into it, you'll see them consolidate more, yeah? So here's the 6 hour. Again, now this looks, you can see them all consolidate here. And again, this is strong. If this can continue pushing down, we get a nice, these could all just spill. It'll be very nice. And they're, but, you know, I won't hold my breath until it happens, you know. And again, here is the 144 and the 100 has been instrumental all the way through in pushing down. So many times on this whole bear trend is price action gets here and just gets slapped down on the different timelines. But these guys have been really enforcers, if I can say it this way. Is every one of these has been a real battle for price action to actually break above it. Only for the next level to push it back down. Here's the 4 hour. You see now this is where the foot gets a bit skanky. Look, the foot's getting older, look. That's a poor buck of the old foot, you know. Again, here's the toe. Look at the big toe. Big toe. Nails about to fall off. So now, again, look, here's the 144 and the 100 coming down. You know, here's the 55 EMA, here's the 20 being a resistance. Again, they're all setting up for a spill. Spill down. Here's the 3 hour, and again, this is where you see the 100 coming in and getting involved here. There's the 144. You can see them all. And you see, this is where you can get the pump up. If you get enough of these underneath, you can give it a good go. You know, only again to get the slap down. Yeah. So there's the 200 up at 67, 68. 200, give it a knockdown. You know. If it did get up that far, it'd be a touch and then a long wick and then a big retrace, and it'll be the end of an Elliott wave, and then if it happens. And again, consolidation, they're all starting to come together. Now this is what I was wondering earlier on, and then look, there's the 200 there as a resistance. These guys, there was the 20 coming down and cutting through the 100, the 55 EMA, the 144 weighted, the 50 MA, the 20 cut through all of these. So you can see that this Elliott wave it was always going to have a hard job getting past this. So look, it spiked up through and it got pulled back to the 50 and the 100, sorry, purple, and the 55 EMA. And look, here's the rejection coming down. So now we want to see a nice strong rejection here. And you can see the foot sort of loses its form as it goes along, as you know, doesn't look so much like a foot then. But you can see the sideways action of the 2 hour, yeah. But that would have looked like a foot when you look at the 2 hour. Is at one point this would have looked like a foot, and then it sort of loses its form, so to speak, you know. And a later timeline takes it on. Okay, so look at the 200 here. Look at the way the moving averages have been coming in here. Look at the way the 200 rejected this here. Look at the way the 144 and the 100 gave the push down here. There's the there's the 55 EMA rejecting it here. There's the 200 rejecting it here. And again, this is the 800 MA. And then this is the 1 hour. So you can see now that in the 1 hour is again the 50. The 50 was rejecting it here, yeah. And you got the 144, the 100, the 55, all these guys coming down, you know. But look underneath it, the 5, the 20 EMA, the 20, you know, the 10, the VWAP. Now the VWAP is resistance at the moment, but you got all these guys coming up here. But you've got a correction coming down, all these guys coming down, and there's a correction come here. So again, is the correction strong enough to turn all these guys and get them to go down? Or will the correction be weak and these guys can get a push and turn some of these, and all of a sudden the hour gets a bit of wind behind it and we're heading for a testing of the higher time frames? And there's the 800 MA there, yeah. But that's all the way up at 70, 71. It's not going to get that far. So there's the 45. They're getting rejected by the 100. I'll fly through these now just a little bit. You can see the consolidation of the MAs, and look, there's the 100 rejecting it here as well. There's the 15. So again, you can already see there's the 800 MA, and then there's the 200 MA coming together. Strong rejection on the 15 minute, and look at the VWAP here, how sharp it turns down. Now this will be interesting. If this behaves like this on the half hour and the hour, like this, if it turns like this on all of them, it'll be that's a strong indication that the VWAP is super resistant. You don't see that too often, but when it does, basically what happens is the VWAP turns down, and then the VWAP becomes the dominant push down, and it starts taking over what the 5 is doing. It just starts to lead, you know. But at the moment, you can see the correction. There's going to be this down, up, down, work its way through, you know. So here's the 10, and again, interesting to see the VWAP was sharp there as well. Look, see how sharp it turned the 5. So sometimes the 5 can be one of this like cresting gently over, where here, like it's like straight down like a hammer, yeah. And again, there's the 800 MA. And then last but not least is the 5. And again, look, I know on the 5, look at this long wick on it. A long wick here for 3, 4, 5. So I think you can see it here. So there's the base. Look, it got its momentum here, broke the VWAP, bounced along the VWAP for support. But now I think this is what weakened it. This pump separated the moving averages. Then look, it went sideways, and then this pump it pulled the moving averages up more, it separated them more. So see where they're all spread out here and again it was like overheating. It overstretches it, and there's the retrace, there's the candle, and then there's the spill. So yeah, these are turning very quickly. Look how sharp they crest over at times, and it takes time. Where this is not. This is like, no, I'm going down. No, I'm coming with you. If this continues like this, it'll be nice. It's indicating a strong correction. But you can see the VWAP. There it is on the nice and sharp on the 10, nice and sharp on the 15. The 30 turn is sharp. The 30 turned is sharp. Yoo-hoo! That's what we want. I want to see that. If you see that on the hour, and then in the 2 hour, the 3 hour, the 4 hour, that's a really good sign for continuation. And then the 45, not so much. But it's early in the game. The 45 is just turned. It's only 3 minutes in. So look at the 55 here is being support, yeah. So now what we need to see is the 55 break, and if the 55 breaks, is you see that the 5 here is resistance. If the 55 breaks, is you'll see that VWAP come down, and possibly even the 5 turn with a little bit. If you get a nice come down, it'll turn, yeah. But there might be a little bit of a breather going on, because look, it pumped, it came down, it came all the way back down to the 55. So practically all of this candle has been retested except this last little bit. So I think breaking the 55 here will be create a nice little spill. So, and then the hour. Yeah, but there's the hour. And look at the 50. Look at the 50 coming down, and there's the 200. There's the 144. There's the 100. There's the 55. That's a lot of moving averages coming in there. Like they're all in a great position for a spill. If it can turn these, it really is which one of these is going to turn. I think this is it. Which one of these is going to turn? Are these guys going to turn these, or are these going to turn those? And is it going to have a pump, or no, we're going straight for the dump? So anyway, that's the story. I could waffle on and on and on, but so that's the overview of the moving averages, and they have a tendency to tell you the long term of what's happened, what's happening now, and what's going to happen. But then it gives you this lovely midterm, what did happen, what is happening in the midterm, and what will happen in the midterm. And then it tells you exactly what's happening right now, is what just happened, and what's going to happen in the next few moments. It gives you all of that. You just got to get used to, when you're looking at the 5 minute, the immediacy of the 5 minute, the immediacy of the hour, but then the 4 hour is not so immediate. Sometimes it is. But then the 8 hour, 12 hour, well, it takes a little bit more time. But then the daily, the 6 day, when you look at the 6 day and you see a position, you go, that's going to happen, but it might happen in 3 days. It might happen halfway through the 6 day. So you got to get used to reading the different timelines, and how it's a bit like a person say, I'll do that for you now. And the 5 minute means I'll do it in 5 minutes. But the hour says I'll do that for you now, as in I'll do it for you in the next hour. But when the day tells you I'll do that for you now, it really means I'll do that sometime today. That's a good way to think about it. When the week tells you I'll do that now, it means sometime in the next week I'm going to do it. So if you think about it that way, it lets you mentally measure the spatial effect of the different timelines and how they play together. So it's like confluence. If the 4 hours telling you it's going to do it, the day is telling you it's going to do it, and the week is telling you it's going to do it, well, you know that there's going to be a push in that direction in the next 4 hours, and within the day it's going to get another one, and then within the week it's going to get another one. So the confluence of that is that you can see that it's like hammer blows. The hammer's going to come down again, then the day is going to hammer it, and the week's going to hammer it, and that gives you a strong indication of what way your week is going to be or not. So stuff like that, yeah. Okay, so I'm going to finish up now, and long session, interesting session, and I hope you got a couple of things out of it that you can integrate into your TA, and begin to, especially with the logarithmic and the long-term channels, they're really important because you can rely on them, and there's not that many of them, and there are certain times when price action comes close to them, and they have a tendency, when price action comes close to those long-term channels or lines, trend lines, it has a tendency to gravitate towards them. So you got to take them into account with your trading and where we are right now, and not get too caught up in, oh, I can't believe this is going to happen. It can happen. It can go there, you know, and there's space for it to move into that. So there you go. All right, guys, enjoy the rest of your day, during just the rest of your night, and I will chat to you guys tomorrow. All right,
Thanks, Roy.
have fun.
Thanks, Roy.
Thank you.
Cheers.
Thanks.
Cheers.